Hi, this is Roger Conrad. I'm editor of Utility Forecaster. What I want to talk about today is first some general market thoughts and then some notes concerning a particular holding, Atlantic Power Corporation. Regarding the general market, we're now moving into the time of year where utilities tend to be seasonally strong, particularly in December. They've usually rallied quite strongly, and we may be seeing the beginnings of that in the last few days. There are some ways to play the seasonal strength through some of the ETFs. I'm generally not the kind of advisor who advises loading up your portfolio with ETFs on a long-term basis. But on the other hand, something like XLU or UTH, which are the symbols for the principal utility ETFs, can be interesting plays as we come into the end of the year. 35 out of 40 times, or 35 times in the last 40 years, we have seen some substantial rallies in the utility stocks. And these basically give you an opportunity to take advantage of that as a seasonal trade. We have recommended some of these in Utility Forecaster the last couple of months. Again, recommendation on these remains buy. And again, when you do get into the first quarter of the year, if you're treating this as a seasonal trade, probably want to think about cashing in at that point, because generally first quarter tends to be a little bit more difficult for utility stocks. As a general point, I think looking forward, we're right now, if you look at the utility averages, about halfway in between the highs that were reached in late 2007 and the lows that were reached in earlier this year in early March. I think what this shows you is that the group is not particularly expensive. And on the other hand, it's also proven itself through one of the most difficult periods, certainly for the American economy. So I think we can feel very, very confident about the companies that we own. I think we're going to see dividend coverage ratios improving as they did in the third quarter. I think we'll see them improve in the fourth quarter, although we still have a few more weeks to run on that. Looks like some of the major underlying signs, some of the vital signs of these companies have gotten stronger over the past couple of months. So I think that's all a very big positive. Of course, in Utility Forecaster, we really do stray off the course. We don't just buy the index utilities. We buy a range of other things. So I look for our performance to be even better. Again, we got some good yields in some stocks that have proven themselves in very difficult times and are not particularly expensive now. In fact, very, very cheap, particularly compared to levels that they held just a couple of years ago, when again they weren't proven in tough times. So I'm generally bullish on the group. Hold on to your positions. In fact, if you take a look at the Utility Forecaster portfolio, you'll see pretty much everything in there rated buy, with the exception of some bonds which have gotten above the buy prices, but pretty bullish on everything. I think things are really moving in the right direction for these recommendations. One recommendation I just want to bring your attention to, and you might have noticed this by looking at recent market action, that's Atlantic Power Corporation. Now, this was a income participating security up until the last couple of days. And what these IPSs were basically bond stock hybrids, and companies would attach a bond to an equity and thereby come up with a bigger yield. Most of these have pretty much blown apart across the spectrum. Atlantic has been the exception. It's in the power industry, so therefore cash flows are considerably more reliable, and they've been able to turn that to their advantage, actually increasing distributions over the past couple of years. Well, what they decided to do here is basically take the bond portion of the IPS and convert that to equity. So they're paying the same distribution as they have been all along. It's a monthly distribution, about 9.12 cents Canadian per month, which comes out to be somewhere in the neighborhood of 86 cents or 8.6 cents US rather per month. So a nice dividend yield of well over 10%. And by converting to a corporation, they become stronger financially by taking a bunch of debt off their books. They're also planning a New York Stock Exchange listing, which will make them a good deal more liquid and more able to finance new projects. Now, what you might have noticed as they made this conversion was that symbols changed, and that created some confusion in the marketplace. So I think if you own this stock, this is a period where you probably don't need to worry too much about watching what happens with these symbols. I think there's going to be some wash around. Could be some panic selling on some investors. Typically does happen when symbols change. But the bottom line is every share, every unit or former of the former IPS has now been converted into a share of common stock, and the company is infinitely in stronger shape. The dividend's the same, and therefore, once we do get through this period of confusion, prices will revert to what they should be. And I think really when they get the New York Stock Exchange listing, we'll see this thing go a good bit higher. So anyway, that's all I have to say today. Thanks for tuning in. Look forward to chatting with you next time.